ladies and gentlemen, hello. Thank you very much for attending this executive interview, where I have a great honor to ask questions related to geopolitics, global economics, and Cyprus in particular. So I have Mr. Michalis Persianis, and we only have around 20 minutes, so I'll try to be as quick as possible in order to go through my questions, but we'll see how it goes. Right, yesterday, the Federal Reserve decided to keep rates unchanged. However, market participants are now pricing in approximately around 40% chance of a rate hike by the end of this year. Now, that's according to the Fed Watch tool, of course. The Fed revised sharply their inflation forecasts. So the PCE for 2026, the headline PCE projection was raised to 3.6 from 2.7, and the core to 3.3 from 2.7. So we're seeing a tendency that major central banks are getting more worried about kind of this potential higher inflation, right? So would you agree that the cause of this is not only geopolitics, but also the rapid advances we're seeing in the tech sector, where enormous amounts of capital are allocated to only a handful of companies?
So we do see a lot of let me get this right, a lot of initial indications of some crowding out taking place. Technological advancement is absorbing a great deal of capital allocation, and that is creating price pressures, both in the energy sector and in some cases, in some clustered areas, unemployment. So one interesting exercise is to say, let's assume there is no war in Europe. Let's assume there is no war in the Middle East. What do things look like if we sanitize our analysis from the geopolitics? Well, it looks like a lot of disruption. There's a huge disruption. First of all, because AI is driving huge capital investments and voracity for energy right now. Because, and I know it has become a bit of a cliche, but climate change is affecting things. If you look at an area, for example, like fertilizers, the energy disruption has increased costs. Hormuz has stopped the supply. The production of fertilizers is problematic, but the overall production of the food supply chain is disrupted anyway. So we have a number of things going on there. We have reallocation of trade routes. We have a number of issues being still worked out. Yeah. People are no longer thinking so much of expanding trade routes and opening up the economies. We see a lot of political leaderships thinking
protectionism basically is on the rise.
Thinking of protection. Yeah. Going towards protectionism, driven by sometimes genuine concerns, like protecting the national economies from supply chain disruptions. Sometimes it's just because it makes political sense in a narrow, short-sighted way. So the world is in turmoil even before we start looking at the geopolitics.
So the technological advancement that we're seeing, basically, do you think that it's going to continue growing, and is it going to push further us towards the so-called K-shaped economy? When a few go higher, but the majority go lower.
We've seen these questions asked a number of times before. We've seen it when it's going to sound funny, but if you think of electricity, if you think of the rail train boom,
yes.
If you think of the dot-com bubble and the personal computer making its way into businesses, the question was, how does this change productivity? How does this change employment? How does this change capital allocation? Okay. And one of the things that we did see, and it's very likely, I don't want to be absolute about it, but there's strong indications that it's happening again, is we become too eager to absorb.
So would you draw the same parallel right now, what you actually said, with the dot-com bubble?
In a sense, I remember this cartoon. I think it was in the New York Times. There were two homeless men on the street, and one was holding a sign saying, "I have 4 kids and no job," and the other one held a sign that said, "I have 4 kids and no job.com," and people were jumping all over each other to give him money. So. Do we know that AI will increase productivity? Yes, absolutely. Do we know how it will increase productivity? The answer is no.
Yeah.
So what will AI look like in 10 years? Let me rephrase that. If the technology stops growing now, so the current technology, what we have available today, if it stops developing and we stay with that, what will AI look like in 10 years? So how will we use it? How will we use it for productivity, to replace workers, to lower payrolls, to manage taxes? How do we we don't know. And on top of that, the technology is advancing so quickly, the we don't know part becomes deeper and deeper. So the industries around the world, and I mean all kinds of industries, still haven't figured out how to use it. In some cases, we do see cases where it actually increases wages and increases demand, even for employment. Healthcare is one of them. And these are cases, and in some areas of finance and even law, because you need an accountable human for both legal reasons and for insurance reasons to sign off on the result. And in those cases, we see productivity spiking, AI really fundamentally replacing human functions, but demand for humans to actually do the sign off, to take the legal responsibility, to look at to take the insurance responsibility, actually increase. One excellent example people are analyzing a lot these days is radiology in healthcare. So radiology has become so cheap and fast because of AI that insurance companies are willing to pay for those services quickly. That increased demand, but that also raised the question, what about insurance claims? What about malpractice? What about cases that will be litigated? We need radiologists to sign off. So we see the bigger hospitals, especially in the US, hiring like crazy, and because they're hiring like crazy, the wages are going up. So we see all sorts of secondary, unintended consequences of these things that are very difficult to predict in many cases.
True. Right now, the situation is very interesting. Of course, like as always, as we humans go along in life, we always think about the goal, but about the transition period, we don't really kind of think about it. And also, like a Standard Chartered CEO likes to say, replacing lower value human capital. That's the... One of my other questions, very quickly. So, because we started off with the Fed, with the central banks, basically, the latest news that came through today that Iran and the U.S. decided to sign the memorandum of understanding. Again, to remind everybody that this is not a deal, this is not a kind of a binding agreement. It's an intent. Let's put it this way. So. Given that we're currently seeing higher inflation levels shooting up a little bit, actually a little bit, probably, going higher quite significantly in Europe, in the US, and in the developed economies, we're seeing central banks, getting worried. So last week, ECB decided to go and hike rates by 25 basis points. We know that. But now, if assuming everything goes well with Hormuz and everything goes well, and we see the ships kind of flowing again, there's no disruption. Do you think maybe the ECB went a little bit too fast by going for a rate hike? Do you think maybe they should have left a little bit of more time? Let's say, as they keep on saying, we're data dependent. we just saw an uptick in inflation, and you're straight away, either they know something that I don't know, or maybe they've gone a little bit too fast. So what's your opinion on this?
Well, the first thing is we're seeing, it used to be that if you took major central banks around the world, Bank of Japan, Bank of England, the Fed, and ECB, they more or less moved in tandem.
Yeah.
And it used to be that the Fed set the pace and everybody followed. What we're seeing lately is a tendency for each of them to take domestic
like the RBA
factors, right?
Yeah.
More into consideration. That tells us a couple of things. First is that the monetary dimension or the FX dimension is still there, but it's not the main driver to the degree that it used to be. And second is that there is a disruption in the balance of power between the currencies. So we are seeing more volatility. When you think in terms of inflation, we don't necessarily have a higher sort of baseline of inflation, but you have a lot more volatility of inflation. Pass-throughs, and if you want to talk a little bit in terms of econometrics and how we measure things and how we track things, one of the big difficulties is that inflation pass-through is a mechanism that changed dramatically lately. And by the way, AI has played a role in that. Okay. Energy consumption has played a role in that. Weather has played a huge role in things like, in many, let's not go into details, but in many commodities. Yeah. So the way the economies react to an initial shock is different. If you look at tariffs, for example, in the US, a lot of economists were looking around saying, okay, where the hell is the inflation? Where is it? And we know it's being absorbed in certain pain points. So we've just started figuring out where it goes to hide.
PPIs are showing that.
Yeah,
CPI is not showing that.
It's starting to show, and it's becoming. It's been how long? It's been.
Like the big board of tariffs, it was in April, but then we had a lot of adjustments and back and forth.
So it started in
April last year.
The big shock was April.
Last year.
We're in June.
Yes.
Yeah, we're in June. We're say 15, 16 months later. Now it started behaving like a traditional model would predict it should have behaved a year and a half ago.
Okay.
So that's why economists have such a hard time figuring things out right now, because the fundamental mechanisms that drove the formula and the models have changed, and they need to be rearranged. So going back to the ECB, we are seeing that the ECB did a couple of things. First, it reviewed not only its current measure of inflation, but its projections for European inflation. And I think that's what drove the question. The second is they did price in a Fed hike. Okay. Maybe at the end of the summer, maybe in September, and they sort of wanted to take the lead for the first time. The ECB, and as a Fiscal Council, we repeatedly complained that you guys are so predictable. The Fed decides, you follow. Then the Fed decides, you follow. Well, there's no executive function in what you do. The ECB is now trying to change that. It's trying to say, the dollar is dominant, but we're becoming more independent from Fed decisions. Fed rates are still significantly higher, but we are seeing investments flooding towards the US at a time when Europe has very low growth, but it also has a very urgent need for more investments to come into the euro. So it had to take that stance and had to take that monetary decision.
Okay, understood. Just checking the time, how much more time we have. So I would like to actually jump slightly closer to where we are right now and talk about this beautiful island and its financial situation. So with the release of the latest annual activities report for the year 2025, you have stated, correct me if I'm wrong, that Cyprus' economy remains resilient. However, growth has moderated compared to previous years, but the economy still has steam left in the engine. So despite the pressures that are mainly external in nature. Now, those external in nature pressures are specifically tensions in the Middle East, or there are some global issues which maybe fall into this category, which you are worried more?
The problem with steams in the engine is You still have some steam to drive the engine. The question
Yes.
is, where's the next? How can you keep the pressure going
Yeah.
on the long run? So there are exogenous pressures. There are domestic imbalances in the economy. There are aspects that give us some concern. Our biggest concern has been the following. There are, from the fiscal point of view, significant spending items, strategic needs that need to be financed in the near future, not immediately, but in the near future. So if you start thinking of climate robustness or climate resilience, natural disasters, defense, the digital transformation of the public service itself, digital transformation of the economy, water stress. So if you start thinking about these pressures, a lot of people were late today, and I know I felt it. Transport pressures,
yes.
Housing pressures. All of these issues will need substantial spending to bring in meaningful reform rather than just patching the walls. So we're saying the fiscal side is good, but it doesn't take into account 3 or 4 or 5% of GDP that will have to be spent immediately or over a short period of time in the near future for these crisis points. The economy is different from what it was a few years ago. ICT is the main export of Cyprus right now. Tourism is becoming a secondary concern. The technological sectors are showing, all the signs of what would look like Dutch disease, but there is no Dutch disease for one very simple reason, and that is because individual investment decisions are not as expensive as, oil in Groningen in the 60s. So we are seeing the economy growing quickly from the technological sector. From the Cyprus point of view, the big question is this, and we did ask for reform on that. How do we talk to you guys? How do we create incentives for you guys to ensure transmission of your know-how, of your technology into the rest of the local economy? So that divide needs to break for Cyprus to become.
There was a key word that you said, tourism. Actually, this is one of my questions, what I've seen recently, I was looking at the statistics of Cyprus tourism revenues, and what caught my eye lately, that this year's March figure is almost identical to February's. It basically came out at 85.6 million against 85.3 million, respectively. Normally, we see March figures exceeding February's by about maybe 50% or more sometimes, again. Last time we saw such a slowdown was back in 2020 and 2021. We understand the situation, what happened then, but currently, such a, I wouldn't say low number, but let's say the same as February number. What caused it? Is it purely, again, Middle East, or the proximity to the Middle East, or actually there is another factor, maybe, let's say, for example, competition from other nations, which can offer maybe something else? So that's, again, an interesting question.
Try to make this, give you a quick answer. We're not worried about tourism. Last year, our report said we don't believe that tourism will contribute to growth because capacities are so close to 100% anyway, there's no room to grow. So tourism has had, what do you call them, vacancy rates that were so low for 3 years that there was no room to grow. The prices kept rising above inflation rates continually. Low borrowing, lending is serviced, renovations were paid for, huge profits. Even if the year remains bad, one bad year will not show significantly on the bank account. So their bankers are not concerned. That's the first thing. The second is that the tourism season has expanded significantly, and that was a big policy success. So we are not worried about tourism. What we are worried about is, again, the secondary effect. So if you take this hotel, There's some guy called Bambos, 2 villages down, who sells watermelon to this hotel. This hotel, if it has, they're not here, are they? If it has a 5% occupancy rate, they don't care. They're going to be fine. They made a lot of money in the last 3 years.
Yeah.
They're good. But Mr. What do we call him, Kostas or whatever, who sells watermelon, and that's what he does for a living, to this hotel, he's in trouble.
Yeah, true.
If vacancy goes down.
Not gonna
so
affect.
there's a local industry that washes the sheets. There's a local industry that gives
True.
cleaning material. The secondary support industries are what we really should worry about. We disagreed with the government when it came to give support measures to hotels and tourism professionals. We said you need to worry about SMEs and small local businesses who can't recover from this pressure in 2026. That's the first thing. The second is, and I'm sure everybody here knows it, is the airline connection.
Sure.
We think that the free market, we have a market failure. It's a textbook market failure. The market can't provide enough coverage. We feel that that's where government should come in and offer better deals, perhaps even, I'll say a dirty word, subsidies to increase connectivity.
Maybe also improving the ferry system as well.
Maybe even the ferry system.
We know that there are some scandals around that.
And additional services. When we were kids, tourism could fly here from, say, the UK, go on a cruise ship, visit the pyramids, go to the Holy Land, and be back over a single weekend.
Yeah.
That was a big industry for a long time. It's died out, but it gives you an example. Sports tourism is a big thing. A lot of professional teams come to train here.
Yeah.
We need better infrastructure for that. Religious and gastronomic tourism, all of these sort of niches can be better expanded.
Okay.
I think that's where the incentives should
go. I'm assuming we're out of time, right? Okay, so I very quickly wanted to have a very short question and maybe just a very quick answer. I know it's difficult sometimes. If you would play Nostradamus' role right now and you would try to predict the future, do you think that we are in a way maybe potentially repeating the scenario of the 20th century?
Oh God, I hope not. We do see these pressures migrate to the world of politics and to voter behavior. We definitely see that. We do see that we are at a point where we don't really know how things are changing. There's an Iran deal for the U.S. How are the Houthis going to react? How is terrorism going to mutate? Where is the danger going to migrate? Will it die? We don't know. What we do know is whatever comes, we know what we should do now, and that is start talking about building. And I don't want to be a black swan, Nassim Taleb kind of statement, but resilience has been a brutally abused word.
Yeah.
But I think that robustness, resilience is what you should work on, and that means better systems, better organization, and more adaptability in things like regulation, in things like tax system, in things like... So we need more resilience, stronger physical infrastructure. Both the US and the EU are in trouble, and Cyprus, because of aging infrastructure. So we need to look at these things. Political adaptability of rules and taxes and physical infrastructure are the only things that we know we should do to make ourselves more robust, so we can deal whatever the scenario is.
I wish we could continue this. But thank you very much, Mr. Persianis. It was a real pleasure.
Thank you.
Thank you. Thank you very much.